Silicon Valley is going through absolute chaos right now. It's like a domino effect with all the major tech companies collapsing one after another. Just look at Meta, formerly known as Facebook. In 2021, they were worth over $1 trillion, but within just a year, that value plummeted by 2/3. And it's not just Meta. Giants like Amazon, Twitter, Tesla, and even Netflix are also experiencing massive drops in revenue. The scale of these losses is unprecedented, especially considering how unstoppable big tech has been for the past decade. Silicon Valley used to be a billionaire factory, churning out prolific billionaires like Bill Gates, Elon Musk, Jeff Bezos, Mark Zuckerberg, and Jack Dorsey. These individuals build their names and bank accounts on the backs of big tech companies. But now, their bubble has burst, and the once thriving tech landscape is witnessing a rapid decline. The biggest names in Silicon Valley are witnessing their revenues plummet, resulting in the firing of hundreds of thousands of people. The stock values of almost every big tech company are also taking a nosedive. Silicon Valley's rapid decline begs the question, how did it unravel so swiftly? The tech industry has been a dominant force, growing larger over the past decade. Despite past setbacks like the dot-com crash, people grew complacent, assuming the good times would last forever. However, reality has struck back. Silicon Valley's once unstoppable tech giants are now shaking at their foundations. The future hangs in the balance as the industry faces uncertainty and chaos. The road to recovery remains unclear. Silicon Valley's immense wealth was not without its problems. Companies like Uber and Twitter relied heavily on investments and struggled with profitability. Yet, they continue to grow on paper, with inflated valuations surpassing billions and even trillions. However, these valuations didn't match the actual worth of the companies. Their business models were unstable, requiring constant investment and struggling to generate substantial profits. Their margins were razor thin. As a result, the stock market didn't accurately represent their true value. Then tech billionaires paid little attention to it. In an intriguing era, stock prices no longer define the true value of companies. Despite failing stock prices, our internal business metrics were thriving. Tech giants rode the wave of future potential, gaining immense power fueled by capturing attention and gathering data. Social media companies prioritize maximizing user engagement, capitalizing on the addiction to phones and laptops. They mastered psychological manipulation, exploiting our emotions to keep us hooked. Provocative content flooded our feeds, while dissenting voices were silenced through censorship. The focus shifted from profitability to amassing eyeballs and leveraging data, as big tech became the gatekeepers of the digital kingdom. Platforms like Twitter, Meta, and others turned into hotbeds of addiction, censorship, and hatred, worsening our cultural climate. The chaos suited tech companies' interests. So instead of addressing the issues caused by their algorithms, they amplified censorship, stifling opposing opinions under the guise of combating misinformation. However, this approach won't last. Consequences await them for meddling in public discourse. Yet, their immediate concern is competition. China has risen as a formidable force, encroaching on Western tech giants' global market share. Tencent, Huawei, and ByteDance strategically undermine Western dominance in gaming, acquiring major companies like Riot Games, Epic Games, and Ubisoft. The landscape is shifting, and Western tech now confronts the dual challenge of self-inflicted problems and fierce competition from China. China's tech giants, fueled by the close ties with the Chinese government, are mounting a targeted attack on Silicon Valley. Platforms like TikTok, investments by Tencent, and Huawei's hardware offerings are rapidly gaining ground. These companies operate with fewer constraints, benefiting from government support and bypassing ethical concerns, while Western tech companies compete amongst themselves. China continues to grow stronger, eroding Silicon Valley's influence. The consequences for big tech are dire, and the battle is far from over. Today, the problems looming on the horizon haven't impacted the numbers yet. Apps like TikTok were just beginning their ascent, and massive growth was still anticipated. By the end of 2016, journalists were hailing Silicon Valley as the future, as a dramatic shift had occurred. Traditional giants in manufacturing and finance were replaced by tech powerhouses like Google, Amazon, Tesla, Apple, and Microsoft. However, despite their staggering valuations, these companies were not as profitable as expected. Their focus on growth overshadowed profitability. Take Uber for instance, which prioritized expansion above all else, even breaking laws and resorting to chaos and violence. Yet, they struggled to generate sufficient profits due to low margins and market saturation. As a result, Uber's stock price is plummeting, and their dominance is fading. The disconnect between Silicon Valley's priorities and the rest of the world becomes evident. Uber still has a slight chance amidst the destructive collapses caused by Silicon Valley's overconfidence. One notable example is WeWork. Founded in New York but influenced by the Silicon Valley's mentality, WeWork was seen as an innovative company set to revolutionize the workplace. Despite financial issues and poor performance, it managed to raise billions of dollars from investors, driven by hype and the idea rather than tangible products. WeWork's valuation soared to over $40 billion, surpassing giants like Airbnb. However, during its IPO, investors realized the company's lack of profitability and massive debts, resulting in a drastic valuation cut and significant layoffs. The CEO and executives were forced to resign, yet Silicon Valley continued with similar business practices, failing to learn from this example. The WeWork collapse was seen as an isolated case by tech elites, but they failed to learn from it. Then, as the pandemic hit in 2019, tech companies seized the opportunity to further consolidate their dominance. Their values skyrocketed, and they made unprecedented profits. However, their overconfidence led to risky investments and a belief that the good times would never end. When their profits eventually slowed down, they struggled to cope. Meanwhile, the culture war intensified during the pandemic, exacerbating societal divisions and negatively impacting people's lives and mental health. The culture war heated up, leading to social media fatigue and China's rise in the tech industry. Despite these factors, big tech remained unaffected temporarily. Tech billionaires like Bezos and Musk enjoyed their fame, but it didn't last long. As the world reopened, Silicon Valley's boom came to an end. Companies like Meta, Amazon, Microsoft, and Apple saw a sharp decline in revenue growth. The problems that Silicon Valley ignored finally caught up to them. The pandemic's artificial demand disappeared, and the economy worsened. People started spending less, focusing on essentials, and having less disposable income. The culture war and bans on social media platforms led to a decline in user engagement. Tech companies, except TikTok, experienced a significant loss of audience attention and profits. This hit them harder than other industries. Erratic decisions by CEOs, like Jack Dorsey being forced to resign from Twitter, caused technical glitches and problems. Google's Stadia Cloud console failed, leading to refunds. Uber faced competition, leaks, and higher prices. Stock values of Meta and Tesla dropped significantly. Tech companies realized the situation wouldn't improve and began cutting costs, resulting in mass layoffs. Microsoft, Stripe, Twitter, and Amazon let go of thousands of employees within a short period. Amazon continued to downsize, doubling their workforce in December. Over 150,000 employees were fired by 1,000 tech companies. Silicon Valley's risky growth-focused approach finally backfired, incurring massive costs. The collapse of big tech led to a surge in skilled job seekers looking to make a difference. So as we enter 2023 with a predictive massive recession, Silicon Valley faces a grim future. Social media companies like Meta are plagued by low user engagement, while supply chain issues threaten hardware companies like Apple and Microsoft. Governments are turning against big tech, scrutinizing their influence, and legal battles such as Google's lawsuit over recommendation algorithms and potential liability for terrorist-related content will shape the industry's future. The tech giants face a true test in 2023, and Amazon has already announced further job cuts. It remains uncertain whether Silicon Valley will regain its former glory. Thank you so much for watching today's video. If you have any questions or suggestions, please leave them in the comment section below. Don't forget to click like and subscribe to stay updated with the latest tech trends. The future is now, so let's keep exploring together.